following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, folks. Basil Chapman sitting in for John Logan. My name might be familiar to some of you because I have the 11 o'clock till 12 o'clock Tiger Technicians Hour, Monday through Fridays. And I also have the opening call. It's my daily newsletter service. So right here at TFNN, been here for what? Almost it's over 11 years, maybe since 2002. Yeah, 2003. Started in 2002, had my newsletter from 2003, so I've been here for quite a while. We're looking at the E-mini futures, the S&P. This is the March futures, up 8. Kind of struggling this morning, going up and down within a 5 and an 8 point range. Very nice action considering that yesterday there was an attempt to find some kind of a low and could not make it. It just kept struggling. Well, I shouldn't say couldn't make it because it did retest the low, but it couldn't hold the gain. Now, what's really important about this morning is that there's a very slow, I'll draw it in for you. Now, my techniques might come to give the same results as many other people, but the actual techniques are quite proprietary in the sense that I discovered them years ago while hand charting the charts back in the 1970s and early 80s. So I always think of myself as riding real close to the ground, getting a feel for things, and then going from that very archaic but very intuitive technique, because drawing the line with a ruler and a pencil really gives you a feel for the structure. It gives you a feel for the gradient. It gives you a feel for the repetitive nature of chart patterns, how they constantly repeat the formations like fractals in any time frame. So it's really important. Let me just show you something. Let's drag it across here. Let me just check to see it comes across there. My technique is basically, the conception is extremely simple. The implementation sometimes is very difficult, sometimes very easy. Basically, I say from the lowest low bar, here's an example, this is the mini, at some point there's the H contract, goes back a while. From a low bar, a most identifiable low bar, that's the best way to think of it. I merely count each successively higher peak, and if the pattern or the technicals are confirming the rally, there should be 4 higher peaks. I label them alphabetically: peak A, peak B, peak C, and peak D. That's the 4th highest peak. A is the first, B is the second, C is the third, and D is the 4th. Technically, the moment you've made a peak, in other words, there's a little inverted V-shaped pattern, that consists of a peak. As it's moving up, the line is considered a leg until it makes the peak, and that becomes a peak, whatever it is. So the moment that the E-mini went by 25 cents higher than that peak C, right there, it started a leg D, and that leg D continued all the way up until it got to a peak D. And there's the pattern. You come down sharply, or it doesn't have to be sharply. It could be a curved pattern, but you make an identifiable low, start a rally, the techniques to the discipline to show what confirms a buy signal to a buy mode is all in my CD, introducing the Chapman Wave methodology right here, available at TFNN. It's a CD book. 476 slides, about 27, 28 chapters, and a very long glossary, and it goes through all the different patterns. I shouldn't say all, because over the years I've refined some, but many. And then you expect at D, something can happen. That's where either the deepest correction is liable to end, or it could restart. And that's where the chapter where it becomes a little bit more complex. But if the MACD, the moving average convergence, divergence, and the slow stochastic are in coordination, it should go higher and recycle. And that's very bullish, actually. Now let's get rid of this, take it away. Whoops, right across. Okay. So what I'm looking at here is in the 120-minute chart. Let me pull this across like that. There was a long-term dash pink trend line that went all the way, and we hit it at 17:15, that's 5:15 in the afternoon on the 10th of March, but it made a little H pattern. These H patterns in my Chapman wave methodology are very, very important. I'll show you something right here. Because an H pattern, we used to call it the dreaded H. The dreaded H has too many implications, so I really like to call it just the lowercase h pattern. And what happens is as a price makes a peak, in this case it's at peak D, and it pulls back sharply, there are rally attempts, but those rally attempts fail on the left side, take out the left side low bar, and then continue even lower until there's a certain point where they make a larger H, and that larger H could even turn into a lowercase M formation. And at any point, you're liable to break the left side low once you start the M pattern. And then the rule of thumb is the bar that takes out the most important left side low. I usually consider the left side low of most importance the one that starts the lowercase h to lowercase m continuous pattern. So the bar that takes that out, it's either that bar or the very next bar that has to move back above that left side low. If it cannot, then you get a pattern that looks a little bit like this. Let me move this away. Whoops. Let me move this away and you'll see what I'm talking about. And what I'm talking about is the pattern that we've seen in gold. This is the monthly chart. There's the lowercase h that went to an M, broke it, could not get back above the left side low, and created a 1-to-1 to the downside. And it's just done it again. It's making the H to a lowercase m pattern. It broke under it over right there. That was November. Yep, November. This is a continuous contract, went to 1132. Now and then it bounced immediately above that 1179.40 low. And what's happened? And this is a continuous contract. That's probably not 1174. No, that's 1184.20. It gets smoothed out. So it went back above, tried to rally, and that rally is absolutely imperative that it takes out a most important left side high bar. And that was the high bar of the July of 2014. Couldn't do it, so now it's retesting the lows. The dollar, I'll talk about that in a moment. The dollar is just making the peak D in the DOE in the 120-minute chart, so it could pull back right here, and that allows gold to have a little bit of a bounce. I'm saying a little bit of a bounce because it's just an attempt at this particular point to try to find some support. Look at crude oil, CL trading. This is a continuous contract. Trading up about 50 cents. There's that pattern. The H goes to an M pattern, breaks down. There's a real good chance that we're going to get, it's a little much to think that from the high of July of 2008 to the low of 2009, you get a 1-to-1. But basically what it would say is that from that high, you could move down quite sharply. My thinking here is that crude oil, because the commodities are in a bear market at this particular point, as long as the dollar is very strong, there's a real good chance that what we're looking at is that crude oil could try to rally a little bit, but in the monthly chart, it's going to go lower. Isn't that interesting? So let me do this right now. There's that H pattern in crude oil trying to rally. There's the weekly chart, the H pattern. In the daily, it's more like the M pattern forming with a failure. So I'm going to be watching crude oil very closely. So let's do this. Now, I know that John likes to look at He has a fabulous platform, and in that platform, he looks at support and resistance levels. I had this developed for me a long time based on the Chapman Wave methodology, way back. This is maybe the 7th or 8th year that I've had it. I do not use it very often because I find that in the techniques that I have, my levels of support, etc., are very clear. But let me do this for those of you who would like to see what I'm looking at. Based on this particular technical tool, the 47 to the 46.58 to the 45.45, that cluster formation, I love to see cluster formations. And if you listen to John, he very often talks about where there are levels of support, but there are overlapping levels of support. And this is kind of what we're looking at here. And most importantly, let me just have a drink of tea here. Most importantly, in crude oil, there is a cluster here which is saying, trying to find some base of support. A break under 45.50 to 45 would be very negative, but there is resistance at 53. That's 7 points above, so you have to look at other areas of support. So I would go into the 120-minute or the 60-minute. But I just wanted to show that as these are different tools that one can use. Now I'm going to go to the ESH 15, the March contract, and show that in the E-mini, on a very short-term basis, you're trying to find some support here. There is what I call a left side, right side price time match between the lows going back to the 5th of February to the high of the 25th of February at 21.17, down to the low of yesterday and today in the 2038.25 area. It actually takes you, my target for the 236s was, in fact, on the 17th. We have 2036, that is. We have already gone close, but we haven't hit it. So there's a chance you could get a little bit of a bounce, and within a few days we come back and test. And the big thing is, will the 2036 to 2034 level hold? Because if it doesn't, the very next level of support is that low of the 5th of February at 2020. Now, I'm not sure we have enough strength, downside strength right now without some kind of a bounce to get that low. That's number one. Number two is if you're looking at the weekly chart, look, the weekly chart says that there's a trend line of support which goes right to where we are at this particular point. If tomorrow afternoon at 4 o'clock, the E-minis are below 2040, that's going to say, hey, you better be really careful because you're breaking a level of support. But you see this up channel? I'll talk about the up channel inside track as soon as we get back. Here's a break coming. This is Basil Chapman sitting in for John Logan. I'll be right back. Love to take your calls at 877-927-6648. Goodbye.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Logan, and so let's do this. The futures are moving around. The E-mini is up 7 at 2046. This is the H contract. This is the March contract. Let me show you the dollar. You remember I was speaking about just a moment ago, for those of you who are new to my technique, what I mentioned was 4 peaks. 4 higher peaks is what we always look for in the Chapman wave methodology. At that particular point, you could recycle high, you could do a whole bunch of things, or you could have your longest, deepest correction. In this particular instance, the dollar 120-minute chart, that's the 2-hour chart, has gone to a recycle right there at that peak D. It recycled to ABC, another D, pulls back as the MACD, the moving average convergence divergence, pulls back a little bit, but hasn't crossed negative. But the slow stochastic is starting to show that it has failed. When it made that peak E, that 5th highest peak, the MACD was starting to turn down, but the stochastic had a real. Let me show you vertically what it is. There it is. Look at the difference between that high, that high and that high. So there's a very big difference between where the technicals are, where that black line, the 9-period moving average is exponential moving average, where the MACD is right there, where the stochastic has just turned down. It continues sideways and squeaks to another high. I have a rule. It's called the rogue wave. It's where you go to the beach and the sign says high tide at noon. So at 12:03, you get yourself ready. You say, okay, tide's going out. I love that one rock right over there. I'm going to go to my favorite rock, sit down, and you put your blankie down, and you get your little snacks ready, and you got your dark glasses, you finish sun tanning, and you're just about to sit down when splash! At 12:06, there was this one wave that just didn't see the sign at the beach, and it's the wave that goes right to the end of the sand, gets everyone wet. But before you can turn around, the wave's already on the way down. Tide is already turned, but the one wave didn't see it. That's the rogue wave, and that's that leg E right there. The technicals had already deteriorated, but there was enough upside momentum to say, I've just got to complete that move. I always think it's a terrible visual to have, but I always have a visual of, I guess because I've had so many accidents over the years, that as you're sliding along on the ground on your motorbike, whatever it is, you can't stop because the momentum keeps you going until where, what? Until you either friction stops you, or something that is a little heavier, like a rock or a pole or something, stops you. But the momentum keeps pushing you, the person, up against whatever it is. Lousy image, but it's exactly what happens in the market. That momentum pushes you further, but the tide is already turned. And what happens is when it comes back, when the price comes back, it comes back very deeply. There it is. You're already in leg 8 to the downside, a tad under 98.96, 1 penny below, and you're in leg B to the downside. So what should that do to gold? I'm going to go to the continuous contract just for now. Look, the continuous contract should, in fact, be doing the opposite. It's gone to peak B, and it should, in fact, be testing leg C. It should be getting to 1165.71, 75 moves in 5-cent increments. Can't do it yet. So we're going to be watching the relationship. And look, here's a low of a trough D potential with a stochastic slightly higher than it was before when the price was much higher. So that's a positive divergence. But the MACD hasn't yet turned around. The histogram, those little red lines to the 0% line, that's trying its best to move. My suspicion is you're going to get a little bit of a bounce in gold as the dollar, and this is going to be the big thing for me, as the dollar index DXY is in leg B. That means no matter what you're seeing intraday, until the very next bar, which in this case is the next day, that's Friday, unless there's a lower high bar, let's just say today's high of 100.06 in the index is the high, and tomorrow there's 100.05 as the high or lower, that makes a peak. Now here comes the big question for me. Is this a very serious leg F to a peak F decline that's coming? Or is it B? The sixth highest peak is very negative. The second highest peak is very positive. This is where you have to make other decisions. So what you do is you go to the mirror image of whatever it is. Maybe there's an inverse dollar ETN, yeah. But in this case, we've got the euro, and the euro is attempting to turn around, just like gold is attempting. We'll be back. Basil Chapman sitting in for John Logan. And what have we got? Oh, we've got retail sales and everything coming out. We'll know a little bit of information very soon. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We've got the E-mini futures at 650, a wild ride, actually. They went all the way to almost 2049 and down to 243. It's trading right now at 245. Actually, it's fairly narrow range considering that it was an economic news event at 8:30. Sometimes it could be much wilder than that. I'm showing the euro. The euro is in leg B up in the 120-minute chart, leg D to the down, still leg D until tomorrow. It has to have a higher low bar tomorrow to make a trough. Remember, you need that V-shaped pattern. See the little tiny move up in the stochastic, still at 4%, very, very weak, but ready for at least a little bit of a bounce. The MACD has so much between that green 9-period exponential differential, I call it the fast-moving average, and the red one, which is the slow-moving average, and the histogram, which shows an attempt, at least, to try to get to the 0% line, but right now it's very weak. So this is just a bit of a balance. That's all. That the power in the dollar has been tremendous. Now, one of the things that I looked at in the dollar UUP is that if I was looking at the UUP, which is the Power Shares DB US dollar bull, what we'd be looking at there, let me move that sideways, is that this has got more of a characteristic of a leg E to the upside than a recycled A, B, C, D, A. I mean, this is just, all I can say is that there's one technique here that is absolutely imperative to keep in mind. And it's the reason why, as John would say, you do not want to be thinking of shorting in this position because there is so much strength. So that doesn't mean to say there couldn't be a pullback. It's saying, I like to think of it as the tide. The major tide in the monthly chart is powerfully up, and it's in, this is a little bit different to the dollar contract itself, the index, which is in leg B up in the monthly chart. This is in A/F. This is really powerful. It's saying that in 2015, the dollar is going to go even higher. Even if there is a sideways consolidation of even 2 months, it's going to be going higher. What's most important is that the weekly chart is in G/C and the MACD is at 94%. That is very strong. And the weekly that's the stochastic. The weekly MACD is still very strong. And the daily is flat. You see this 97% in the stochastic and the slow stochastic, and it's holding there. If all of a sudden within a week, so let's give it 5 to 7 trading days, the dollar, the UUP, 26.36 right now, well, actually 26.15 right now, down 21 cents, starts to take out 25.30 to 25. That would automatically see the stochastic and MACD weaken a lot. And in fact, that kind of a pullback could get the stochastic under 80%. But as long as it's holding in the 95% area, 93%, and flattening, that means that there's internal buying. So the pattern to look for, if you're thinking that the dollar is about to break down in the daily chart, and that this in fact is a leg F, not a B, then what you want to see is consistent selling, a rally that fails, that makes this kind of an H pattern right here, and then takes out the left side low bar, wherever that is. Let's just say it's at 97.80. It takes it out and immediately goes to 96.90 and then 96.24 and makes what I call the A formation. This is the Eiffel Tower formation. It looks like this. Let me make this a little bigger and you'll see exactly what I'm talking about. And you'll recognize the pattern. You'll recognize it because, whoops, you'll see it in many places. So we're going to go red and we're going to go to the biggest. All right, there. That is the pattern we're looking at. Straight up, straight down, straight up, and straight down. We'll see. It's going to be very important. Now, what's happening is, let's see where gold is. I'm a little behind, so gold should be trying to rally here. It's up 5 at 1155.70, and I'm a little bit behind, so I don't quite know what gold is right at this second, but I can tell you that the GLD is at 111.19, and I'm pretty accurate on that one, and it's only up 44 cents. This is a very important period for 2 reasons. One is, it's the first opportunity that the ESH 15, because it's at support, has a chance to bounce. And my suspicion is that if it bounces, it looks like this, makes an H pattern. Maybe it can get to 2058, 2062. That's up about another 150 points in the Dow, maybe another 15 or so points in the S&P E-minis. We're going to see. It's a very important session. Why? Because if there is a bounce, let me just go to this particular chart right now. This is what I show my subscribers every day. I give a lot of information about the 120-minute chart. And this is what I had shown my subscribers, that there was an oval pattern forming. We've looked at this many times. Let me just open this out. Oh, I don't go back far enough. Well, I will go back far enough. Let me go symbol, 30 days. Let me go to format, and I'm going to make format. Let's go back 90 days. 90, right there. Look at this. You see these oval patterns or the circle patterns? Whenever the price of the 120-minute chart of the Dow and the 120-minute chart of the VIX index get too close together, it's a mirror image. They start to hit a certain point and then open out. And that's what I say to my subscribers. One of the reasons why I think that there could be a bit of a rally today is that we've gotten to that point at a peak E in the 120-minute chart. One of the reasons why we had the VIX index as a long position, took our profits this morning when the stop was hit. And we're still short the Dow, because the Dow, as far as I'm concerned, yep, there's a kind of a doji candle, so you can get a nice little bounce here. But I suspect that the bounce is going to be fairly limited to 1.5 days. Maybe goes into Monday, but then I think we start to come back down again. We'll see. It's going to be, as I say, a very important session because it allows for the very first time certain things to happen. And look at this. This is the right here. It's what I said to my subscribers, called my triple yield chart. The 30-year yield, T bond yield, that's the white one, went to a leg B. It could make a peak B this week. This is the 10-year T-note yield, and that's the 5-year T-note yield at B, peak B. I suspect by Friday, tomorrow at 4 o'clock, we will have made peaks. We're going to be watching this real closely. Let's go to Howard in New York. Howard, how are you?
It's Alex in New York.
Oh, Alex. Oh, hi, Alex. How are you?
Okay.
Good.
I put a position on in the Russell 2000, the IWM, in October when it made what I call the short-term bottom.
The October 15th low, yep.
Exactly. That's the date. And I've noticed that it hasn't been as weak in this pullback. And sometimes they say the Russell 2000 is a leader. Now, do you see it also not being as weak and sort of coming back?
So let me show this to those folks who are looking at Tiger TV and see my charts right here. You'll see this is a weekly chart. And the weekly chart is held well above the 9-period moving average. The IWM is the iShares, the Russell 2000 ETF. It has been in a move to the upside from that October 15th low. And congratulations, that's a spectacular move. And at this particular point, you're still holding long, correct?
Yes.
Okay.
Yes.
So what
I got it at 105.
So 105, and the low was 103.54. If ever that was a perfect entry point, fantastic. Alex, that is great. Now it's making a leg D and almost certainly a peak D by tomorrow at 4 o'clock. Why? There is absolutely no chance that by tomorrow, I like to say that, just to tease the trading gods, by tomorrow, the 123.79 level will be hit to extend leg D. So there's just no way that we can get that between today and tomorrow, unless something absolutely spectacular happens. You can have a very good rally, but I just don't see more than a point. Let me see, the price is 123.78. I don't know if I should test the trading gods like that in public too, but I don't think it's going to happen. But it is holding very well, and the monthly chart is in leg D and it's holding very well, and the daily chart has not had quite as big a pullback as some of the other indices. So you're absolutely correct. Now, to answer your question, what I heard the other day is that the mix of the Russell 2000 right at this particular point with what's happening in the dollar and what's happening in the oil patch, etc., is favoring the IWM because, in a sense, many of the stocks are under the radar. That's basically, the chart seems to confirm that particular point of view. That's number one. Number two is when I was interviewed by Tom the other day, I was pointing out that there was like a sandwich effect in the Dow in a number of the charts, in that from the high of the 2nd of March, almost every other day, the market has had a sharp pullback and then an inside bar. And it just kept doing that right up, in fact, for the IWM, right up to yesterday, which means that if today there isn't a sharp pullback, you've suddenly got, and you can look at the 120-minute chart, you've suddenly got the chance that the big gap that was created when the market closed on the 9th, the IWM closed at 121.68, gaps down the next day with a high of 120.65, almost a point lower, that we're going to try to fill that gap. And on the 120-minute chart, what happened? And this is one of the reasons why I just love, over the years, I've whittled away at my various indexes and indicators to try to keep as few on the charts in highlighted colors, and one of them is the 120-minute chart. And two things happened in the IWM. It made a perfect from the gap up high of at 11:30 on the 12th of February in the 120 area. It started a move that went to what a particular candle that I chose as the left side in what I call left side, right side price time match, together with the Chapman Wave inside wedge dashed pink line, and that should have taken you to at 11:30 same time, but on the 10th of January, the 15th, 2015, and that's a test of the low of 1984, and it was the exact day. It was actually one bar in the 120-minute early. It went to 119.83. Now it's rallying off this orangey 200-period exponential moving average, exact left side, right side price time match. It isn't what I call the plumb line. It's one that I chose. And now you've got a rally. So I love the fact that you're in this position. You don't have to be worrying right now about the nuances of some kind of a pullback occurring in this time frame. Not at this particular point, not until the 119 support is taken out. And what I would say to you, Alex, is if on the IWM, if you see 119 being tested, I would suggest to you, rather than adding to a position, I would actually take off a little bit, and you can start thinking of putting it back maybe 2 points lower, or waiting a few weeks before you put it back. Because if that is taken out on the IWM, which I agree has been one of the stronger indices, that's going to be telling you, peak D in the weekly, this could be time and price to sideways, to down move, and that would impact the monthly chart a little bit, because 117.54 is really important support in the monthly chart. So let me put it this way: I would not be doing anything if I was you, because you're in a great position. I would see what happens between 121.64, which looks like it's going to be hit this morning, and the candle of the 5th of March, 122.92. That's going to be a key area, and I'm just going to draw this in now, because there's a chance that that is the point where the market starts to find it can't support the rally, and that it starts to pull back. And that's the only thing that I would say to you. You're in a great position. If I was looking out for the rest of into the summer of 2000, summer going into the early fall, my suspicion is that the IWM has a chance to get to the 125s, but that really makes it absolutely imperative that the 117 to 116 support is not taken out decisively over the next 3 to 4 weeks.
Would you change your mind that in the very short term, I'm saying in the next 4 or 5 trading days, it goes to a new high?
I think there's going to be a rally. I don't think that the Dow or the S&P are going to take out the high. I don't know. This takes me to the question of, will there be a leg D in the S&P in this time frame, or do we have to wait? Wow. Hey, can you hold on, Alex? That's a great question.
Sure.
Okay, I'll be back, folks, and I'll try to answer Alex's question in the next segment. Got a couple commercials coming up, and then I'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, folks. Basil Chapman sitting in for John Logan, and I'm just about to wrap up in this section. I'll be back at 11 o'clock till noon. That's my usual time for the Tiger Technicians Hour. If you want to see a follow-through, hear a follow-through of what we're discussing, now I'm going to be doing it in even greater depth in my show at 11 o'clock. But straight after this particular show, you got Tom O'Brien coming in for Steve Rhodes. It's the Trader's Edge. Should be a great show, and I'm looking forward to it very much. But in the meantime, we're on right now with Alex in New York, who has the IWM, and then he asked the question, which is a very important question: can there be new highs in this particular time frame? My suspicion, based on all the work that I've done, is that I don't think there's enough impetus, enough momentum until the S&P really creates some kind of a low of substance that allows it, with the volatility index screaming to the 19s or 20s, and at this particular moment, the VIX is still back in the 16s. So I'm looking at this and I'm saying counter-trend rally. This is important. If I look at my Dow Quartet index, which is made up of GE is fading. It made a peak F-top. It's under the 200-period moving average. It should try to bounce, try to test 25.48, but the weekly chart is not all that good. IBM had a very good rally in percentage terms from the under 150 to over 163. It's now trading at 156. Not good weekly. There's that lowercase h that goes to an M. Man, I tell you, patterns just repeat over and over. You've got triple M. Triple M is a key Dow stock. It made a peak D in the daily at 170.50. It looks like it's got a peak D in the weekly, and all that can happen here is it could have a right shoulder to the right side. I don't think it's going to make a new high just yet, and the monthly chart is still looking great. So and UTX is my final one, and UTX made a peak E in the daily. It's a D in the weekly, and it's under the 9-period moving average. It's got a lot of work to do, and the monthly is still looking good price-wise, but not technically. Alex, I think not. I think we will not make a new high. It's a bounce, and that bounce should make an arch formation. Then we come back and do the retest. That will be key, and that'll take us to next week or the following week, and that's going to be very important. So the answer is, I don't think so. There should be a bounce, but the IWM is actually one of the better indexes. Is up 0.75 right now, pre-market, and that's a really good sign, and that shows that it's got internal strength. I would just keep my position, raise my stop, and then take something off as it turns around. And but I'd keep my core position because you got in at a fantastic level. Or I'm going to say, leave it to you. You're the guy that did all that fantastic work. So I hope that helps you, Alex, a little bit.
It does, Al. Excuse me.
It's my pleasure. It's always great to hear from you, and we're always impressed at your entry points and what you're looking at. Thanks so much for calling. I appreciate it.
Okay, have a good day.
You too. Thank you. So, folks, we're about to wrap up. So let me just show you something. The E-mini is the S&P. There's that nice bounce. Look at the 120-minute chart turning around, leg B. That's starting leg B. This should be a nice move. Let me just see. The GLD is now only up 25 cents. Let's see what the dollar is doing, because now I'm with it. Dollar at this particular point is down 81 cents. I've got it down 66. So it's if that's correct on the DXH contract, then we're looking at it taking out that left side low. Going to be very interesting by the end of the day. Why? Because if gold does rally, it has to rally quite sharply, and the TLT, I never even got into that. I'll do it during my show. It's really important what the TLT is doing because of many things. I'll be back in another 2 hours. Stay tuned for Tom O'Brien, and thanks for being here. Check out my opening call on the front page of TFNN. Have a good day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.